This is going to be a recording of what I do in the last hour. This will be maybe 20 minutes, hopefully. And you'll see what I do to scan for swings. Because a lot of traders say, Rob, can we just kind of see what you do at the end of the day to scan for swings? And this recording will obviously be sent out to everybody. We had the Amazon swing, and so everyone's starting to remember, oh, right, this is not just about day trading in the Sector Secrets Mastery. And, let's see if we can't get, more opportunities for swing trades. We're still in Amazon, right? But so how am I going to start my swing process? Really easy. Let's start with the indices. So if you want to list to sort of start with, do it like this. It could be QQQ, DIA, IWM, and then SPY. So actually, let's start the way I would when doing this. So QQQ. What's the underlying structure on the 1 hour and the daily? That's it. 1 hour is going to be a 1 to 3 day swing, and the daily is going to be possibly a 2 to 10. Now, Amazon was a 1 hour swing, right? Just to give you an idea of the brevity of the trade and the expected time horizon. The next thing we'll do is just sort of acknowledge QQQ went neutral, and it is neutral also on the daily. Is there anything for me to do on the QQQ? The logical question is, Rob, what exactly are we looking for? When you're scanning like this, what are you looking for? Are we at either one of the daily price movement ranges? And what's the slow stochastic doing? Right, that's really it. I would say there's nothing standing out on QQQ. So then I move on to DIA. So again, gang, what this recording is designed to do is walk you through in about 20 minutes how I would look at some major symbols to get a feel for what would be a candidate for a potential swing. Now, DIA is a little bit better. See, DIA would be something that would qualify for on the radar, because clearly DIA, and this would be the 1 hour and the daily, look at the red structure. If for whatever reason in this red structure I was able to get to this gold zone, that's potentially just a good old-fashioned trend following short. And I would try to do that, well, I should say trend following put. And when I would try to do that on the daily, if at all possible, and I would want to do that with a 2 to 10 day time horizon. And furthermore, I'd like to do that, if at all possible, if we can find some liquidity, right? DIA can be remarkably illiquid. So I'd like to do that preferably with about 2 weeks to expiration. And unfortunately, the problem is going to be finding liquidity when it comes to DIA, which is so often the case, right? If this was going to come up, it would be the 20 October, and I'd probably have to go a little deeper in the money than I'd want to, right? A little deeper in the money. So this is not a setup, but I realized the challenge here is liquidity is either going to be at best at 334 with the puts or 335. So not ideal. So I'm just going to move on. All right, so where do we move on to? IWM. All right, IWM. And here, IWM, I would definitely put on the radar. And chances are IWM is going to be a far better setup, 1 hour and daily IWM, because there's usually a whole lot more liquidity. So when I crack this open, once again, I want about 2 weeks. We can look at, say, October 18, but you're going to notice there's no liquidity. October 16, kind of thin. We're looking for puts. October 20 is absolutely where all the open interest is. And so if I look at October 20, IWM, right off the bat, what am I doing? Red and gold, right? Red and gold. So if I can get puts, if price travels to the daily price movement range, this is going to make a lot of sense. Most definitely better than anything that I'm going to find on DIA from a liquidity standpoint. And since the width right here is 172 to 173, I would go with the 174 put. I would go with the 174 put in that regard. All right. Okay, so the last thing I'm looking at is SPY. And ultimately, here, once again, gang, you might say, Rog, is the S&P in a downtrend? If we look at S&P futures, yeah, gang, S&P 1 hour is in a downtrend, and even the S&P daily is starting to succumb to that second close with the red multi-trend, right? So all of a sudden, SPY puts are making a lot of sense here. Is it my favorite? No, I actually like the IWM the best. We'll talk about KRE. I'm going to jump over to KRE after we take a look at the SPY. And the challenge with the SPY, the reason I'm likely not going to set up the SPY, despite the fact that it's going into a downtrend, is it's the least established on the ES. While, if I take a look at that RTY IWM, this is far more established. Far, far more established. So right now, I really like the 1 hour and the IWM and the daily IWM. So let's move on to KRE, because I'll be far more interested in a sector agreeing with what's going on with the index. Right? We want that confirmation. So this is another thing I'm going to look for. So again, what I'm trying to do is start at the top of the food chain. We started with the Nas, Dow, Russell, S&P. Russell looks great, and it makes a lot of sense then to take the next step. Index, sector, right? So if you want to think of it this way, the first scan starts at the index level, right? Now I'm at the sector level. So does KRE look great? Absolutely. Red structure 1 hour, red structure daily. By the way, I'm not trying to point out that they're both red and that they both need to be red. That is not the case. This is not multiple time frame confirmation. What I'm pointing out is the 1 hour in and of itself would have a short-term swing that is valid, and the daily in and of itself would have a long-term swing that's valid. Do I mind that they're in agreement? Absolutely not. I love it, but I don't need it. This is not, I'll only trade the 1 hour because of the daily. Not at all. The 1 hour can stand on its own. Is it better if the daily is in agreement? I think it certainly does not hurt. Right? So let's jump out once again to where we could find some liquidity on the KRE. I'd like to have a little bit of time. I need less time for a 1 hour, right? If I'm going to go with a 1 hour, I don't mind under 2 weeks. If I'm going to go with a daily time frame setup, I would prefer around 2 weeks, because the idea is on a longer term time frame, especially one in a trend, it'd be great to be able to take advantage of a longer term move to the downside. I need a 41 or 42 put to make this work. So sometimes the expiration is going to dictate what it is that I'm looking for. So it may be, hey, I don't need as much time as October 20, right? I really probably don't for the 1 hour. But if I'm going to find liquidity at the 41 and a half or 42 put, right? 41 and a half or 42 put, I'm going to have to go out to October 20. I'm just going to have to go out there. So it's not that I'm choosing October 20. Liquidity is going to push me out there. All right. Liquidity is going to push me out there. So I would definitely put that up near the opportunity with the IWM. Now remember, this is an and or. I don't know that I would set both up, but I want to have both readily available, right? Now, since we did take a look at the DIA, let's at least take a look at the XLF. So in my mind, as I'm doing this process, notice that I'm not randomly going to different sectors or stocks. I'm looking at where I like the index, and where I like the index tracks to where I like the sector. So XLF, downtrend on both the daily, downtrend on both the hourly. It means both individually are valid. The trick is going to be, is there a liquidity at, say, the 33 strike? There is, but what's the cost? And that's where, in the case of something like XLF, which I'll again put on the radar, the way that I need to adapt to XLF to make sure I'm giving myself time, I'm sticking with where the liquidity is I've got to be, again, 33 or 34 strike. Do I have liquidity in the October 13? I do not, right? 33 is 94 Sorry, 33. No, I take that back. I do have liquidity. So the 1 hour, no, I take that back. So 1 hour, I would set up 13 October. And I'm just looking at this on the fly as I'm recording this for you all, gang. I'm literally walking through what I do here in the office as I'm going through the process. So October 13 is actually fine. I could look at the 33 or even 33 and a half or even 34. 33 and a half or even 34 put. So there's 3 different strikes I could think about for October 13. The 1 hour is fine with that shorter time to expiration. But on the daily, I would go out to XLF, and I would go out to the October 20, and then I would look at the same strikes and see where the liquidity is. So cracking open, 20 October XLF. Once again, 33s, plenty of liquidity. 34s have over 100,000. So let's just round out and say, hey, we can look at the 33 or 34 put. And again, this is the way I'll think about it. And these are daily price movement range zones, these gold zones that I'm looking at. Now remember, every day there's going to be something. There's going to be something that catches. Maybe it's a wick, maybe something is going to catch our attention, right? There's always going to be an event, news, candles, a wick, something. But it doesn't matter until we have price action, the multi-trend read, so we have some sort of directional bias, and then we get in sort of the X marks the spot zone, right? So keep that in mind. So when I'm looking at this, for the KRE, all right, let's go back on over here. Oh, I was editing the wrong line here. On the KRE, where do I want to be? Up at the 41.5 for 42 put, and then with the XLF, depending on where we get to, I want to be with the 33 or 34 put. All right, now of course, if I want to go index sector stock, that could lead me to JP Morgan, right? So how do we get to the stock level, right? Now notice here, I'm gonna make a note. Note, JPM 1 hour on the radar, right? The daily is not necessarily on the radar with the same quality. It has a red multi-trend. Now, for those of you wondering, Rod, could we short into a yellow multi-trend and a yellow or gold DPMR? Yes, but if I'm always trying to prioritize trends, then it makes a lot more sense to focus on which time frame and which symbols have a trend. So moving on then through our list, I don't want to focus just on the short side, although it seems the first few symbols that have caught my attention are things on the short side. There is a possibility that we start to see some strength in tech, but if I do, it's probably going to start with the NASDAQ and or any relative performers. So let's talk about relative performers in the NASDAQ. So I may not have setups here, might be a little too soon to do that, but let's crack open the QQQ. And so what I'm doing now is I'm going to go on over to my multi-trend, looking at the daily time frame of the stocks weighted within the QQQ. And I'm only going to focus on those above the 200 and at least in a neutral trend. I got to tell you, not a lot looks awesome, right? Apple's in a downtrend. That's a problem, right? Microsoft looks okay. Amazon looks okay. So, I'll tell you, the long side is not super appealing at the moment. If we go crack open the XLC, so now I'm getting specific to the communication sector, Meta and Google look pretty good, right? Meta, Google, Activision, some of these look pretty darn good. But again, as much as I'd like to see a little bit of a bounce in tech, right now, it does seem if we're going to have a swing, it might be a short focused on Russell, Dow, regional banks, perhaps financials. When I take a look at consumer discretionary, there are far more things to short in consumer discretionary than to buy. So consumer discretionary, Amazon seems to be this lone standout, as is Tesla. But these are really there's actually mostly just 3 tech stocks here. And I'm not even sure that I would call Booking a tech stock, frankly. But it's probably a tech as much as, say, Amazon is, right? Most of consumer discretionary, despite the fact that it's heavily weighted within the NAS, most of it is not tech. So consumer discretionary looks pretty awful. But Amazon looks pretty great. And the reason it looks good is because it's still above the 200 and it's neutral. So not an easy environment, but slowly different windows of opportunity are starting to pop up. Now, do I have to stay only in index sector stock relating to the broader averages? No, I don't have a problem with starting to ask myself, are there opportunities in home builders? Are there opportunities in other sectors? Hey, this has gone straight up red trend. So if I'm going to look for some trend following swings, one of the things I'll say to myself is ITB on the radar for long puts. So I'm not necessarily trying to do this with the objective of having a setup. I'm doing this with the objective of looking in the direction of where the best follow through is going to be and on which time frame could it be. And that's going to be the 1 hour or the daily. That is the whole purpose. So again, in this 20-minute recording, the whole point is, can I take a good look at what's going on across a number of indices and sectors? Can I take a look at some individual stocks within some of these indices and sectors and ask myself, hey, is it worth putting XLV on the radar? So when I am scanning for swings, I can start to narrow down what looks reasonable. Now, XLV, especially on the put side, is remarkably thin. It's really, really thin when I'm trying to find, say, 129 or 130. I should say 129 or even 129 and a half. 130 is just nothing, right? So then I ask myself, well, what about Johnson & Johnson? It's a proxy for XLV. Is it in a downtrend? Yes. 1 hour could be a really cool 13 October setup. It would be likely the 157 puts. Now, is there liquidity in 13 October? Negative. So that's going to push me right out to October 20. Do I have, and let me just double check, do I have liquidity there at 157? I do not. So then if I go to October 20, XLV, 20 October, yes, 1 hour and daily, I would keep an eye on and we're probably going to have to go up to the 160. We could go 157 at aggro levels, right? 157.50, but really we're probably going to be looking at 160 puts. 160 puts. So right away, this is not about setups, gang. In 18 minutes, what have I been able to do? I've got index sector stock dialed in. I've got a pretty good list of where the weakness is. In this case, I can't find uptrends. I cannot find uptrends. So what I'm going to do is focus on the trends that are down, and then I'm going to have to focus on the next set of opportunities for us in terms of where clarity will be. And I'll tell you, when you take a look at where we are right now in a number of places, I'm quite bullish in a number of places, but it's actually hard to find some uptrends. Heck, it's getting harder to find neutral trends. And if the downtrends are there, right? If the neutral trends are there, what I can do is start to say, well, yeah, sure, I love Johnson & Johnson, right, as a proxy for healthcare, right? So XLV via J&J, 160 puts. However, right? When I look at some of these, remember, neutral is not out of the question. It really isn't. But neutral can go into a trend very quickly, which could either upend the trade, right? Could either upend the trade or have us tighten the stop. Going from a trend to neutral is an easier adjustment. So consider this. Going from, I'm going to put this in the notes before we wrap up here. Going from a trend to neutral is an easier adjustment, right? So notice I'm going to focus on trends. Going from neutral to a trend, unless that shift is in our favor, can be a much more difficult thing. So focus on trends first, right? Focus on yellow last. So focus on red, green multi-trends first. Focus on yellow last. All right, so that is the end of this recording. I hope that this little 20-minute swing walkthrough was helpful. Maybe I'll do this more often, and I'll send this out as an alert shortly. All right, hope that was something that will get your process going. And so you get a pretty good idea of what I'm doing. And by the way, this can be a 20-minute process that can be done every day, right? This 20-minute process, and this took me longer because I'm walking through it here in the recording. You can take 15 or 20 minutes and walk through this in a similar way every single day, maybe even twice a day, right? So I hope that now that you got a framework for it, it's something that doesn't feel daunting. It feels like something you could set aside 15, 20 minutes, hammer it out, and then get on with your day.